Cathie Wood just dropped some bold predictions on CNBC, and it could change the way you think about the markets right now. In her latest appearance, the 𝗗𝗏𝗏𝗧 CEO said, "We're moving from a recession to a recovery right now. Not next year, not in 6 months, right now." She also made it clear, interest rates are coming down, and no one's ready. This isn't just another market commentary. This is Cathie Wood laying out her entire roadmap for where the economy, inflation, the Fed, and tech stocks are all heading next. And trust me, you're going to want to hear it. In this video, I'm going to play you the full clip of her interview on CNBC's Squawk Box. Then right after that, I'll give you my personal breakdown, what she really meant, where I agree, where I think she might be wrong, and what all this means for your portfolio. And most importantly, I'll reveal the one tech stock I believe has the potential to create the next wave of millionaires. So stick around. If you only watch one video today, make it this one, and watch it all the way to the end. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Smash that like button. Let's hit 1,000 likes on this one. Drop your thoughts in the comments. I want to hear what you think. And of course, hit subscribe so you don't miss the next big financial investing update. Alright, here's what Cathie Wood had to say.
The S&P 500 closing at a record high to finish the first half. The ARK Innovation ETF trading now near a 52-week high, up nearly 24% year to date. Joining us right now, first on CNBC's ARK Invest Chief Investment Officer and CEO Cathie Wood. Good morning to you. As we set up for the second half here, Cathie, I think there's a lot of folks who are trying to figure out how have things already run, what's baked into the cake and what isn't in your mind.
Well, I think we have been climbing a wall of worry. I mean, a lot of people expected tariffs and wars and the controversy between the Fed and the president to really shake markets up. And of course, there has been some volatility. But these are the kinds of bull markets that I think are the most durable. When the market climbs through all of that controversy, it's really signaling something. And I think the things that it is signaling are interest rates probably are coming down. And I think what many people are not focused on in the inflation statistics are the housing numbers, and they get in there with a long lag. We think that the shift or the concentration towards just a very few stocks, which was a very unhealthy bull market, that is changing and the market is broadening out. And I think deregulation is probably one of the most important things that this administration is doing to unleash animal spirits.
You know, you talked about the inflation picture and interest rates. We just had another guest on the broadcast that said the opposite, effectively. Said, look, the economy is humming. It's doing quite well. They wouldn't touch interest rates if possible, and they don't think that they will be.
Mm-hmm. Yes. Well, I think we've been pretty consistent on this idea of we've been through a rolling recession. If you look at housing, which is actually having a little bit of a relapse today, housing plummeted in 2022 when interest rates shot up, and it has not recovered. Manufacturing has not recovered. And so we do believe that they will recover as interest rates come down, deregulation takes hold, some certainty about tax cuts and so forth occur, including immediate expensing, perhaps, of capital goods, which would be very positive. So we think we'll move from a rolling recession into a recovery. But what happens early in a recovery, if you'll allow me to call this that, I know many people think we never went into any kind of slump, but we have sector by sector. What typically happens when you come out of a recovery is productivity kicks in because companies have been very conservative and especially amid all of the uncertainty. So productivity kicks in and actually drives inflation down much lower than anybody anticipates. And I think that's going to happen this time as well.
Cathie, want to talk Tesla, want to talk Elon Musk. He's been making some more public comments again about the quote-unquote big, beautiful bill. He's opposed, of course. But I'm so curious just what you've been thinking as you've watched all of this play out the past couple of months, the politics of it all, the impact potentially on Tesla, his now doubling down on Tesla, but where this all goes.
Well, I think what happened, and this could be considered a conspiracy theory, but, with Trump and Musk so close at one point, and with China, President Trump's primary focal point when it came to trade negotiations at the end of the day, Tesla's plant in Shanghai became a leverage point. So I think they've separated naturally. Now, I think it went a little overboard in terms of the drama. And I think the same is true today. I do think that Elon Musk is getting back to business, and he does want to transform transportation, continue to transform space exploration, really address some incredibly difficult health issues with Neuralink. And introduce productivity the likes we have never seen with humanoid robots. So I think at the end of the day, he'll become very focused on those very difficult problems, and this too shall pass.
Do you think that he's going to be out there effectively financing folks, financing campaigns to primary individuals who vote in favor of this bill? And if he does that, and whatever time and attention that takes and whatever you think about the politics of that, does that impact Tesla or any of the businesses or other ventures that he's pursuing?
Well, I guess in terms of dependence on government, SpaceX, I believe, has $22 billion in government contracts, and really has catapulted the U.S. into the lead when it comes to space exploration. I don't think the president that formed the Space Force wants to change that. And in terms of transportation, of course, we've got a patchwork quilt of 50 states from a regulatory point of view that have to bless autonomous travel. We were thinking and still think that will move up to the federal level. So maybe that's in question very short term, but we think it makes sense for the United States if we want to be number one in autonomous travel. FDA is another consideration when it comes to Neuralink. I think what's happening is pretty miraculous if you've been following Neuralink. And the FDA, if anything, I think we've been most surprised by the deregulation that is taking place within healthcare and the desire of the leaders in healthcare to really either cure disease, get rid of chronic conditions. So, Elon Musk is contributing to that cause as well. So, I'm sure there's political tit for tat. That's how these things work out. But Elon Musk is working on the largest AI projects in the world, the largest projects in the world. And I don't think longer term he wants to be thrown off really transforming the world.
Right out of the gate, Cathie jumps into the state of the market. The S&P 500 just closed at a record high, and the ARK Innovation ETF is sitting close to a 52-week high, up nearly 24% year to date. That's big. But the key takeaway here is why she thinks this is happening. Cathie believes we're in one of those classic, climbing the wall of worry bull markets. The kind where things keep rising despite all the noise and fear around inflation, geopolitical tension, and Fed drama. And she makes a compelling point here. Historically, these are often the most durable bull runs. Why? Because they're driven by underlying shifts, not hype. And what are those shifts? According to Cathie, one of the biggest signals from the market right now is this: interest rates are likely heading down. While a lot of investors are still laser-focused on the inflation numbers, Cathie's looking elsewhere, specifically at housing data. And here's the kicker. She says housing numbers lag behind, which means current inflation might be overstated. So in her view, the market is reacting to an unspoken truth. Inflation is probably on its way down, and rate cuts are back on the table sooner than many think. Another big point she makes is about the breadth of the market. Remember how just a handful of mega-cap tech names were carrying all the weight last year? Cathie's saying that's changing. We're starting to see the rally spread out across more sectors and more companies. That's huge if it's true, because a broader rally is healthier, more sustainable, and frankly way better for retail investors who aren't just holding Nvidia and Apple. She also mentions deregulation, and in her view, this is an underrated tailwind. According to Cathie, the current administration's deregulation efforts are unleashing animal spirits. Translation: businesses are finally feeling freer to invest, innovate, and grow, which sets the stage for long-term gains. Then comes one of the more controversial takes, and I'm talking about her take on the recession debate. Cathie doesn't buy the idea that we're in a classic recession. Instead, she says we've been through a rolling recession, where different sectors took turns getting hit. Think about it. Housing plummeted in 2022, manufacturing never really bounced back. But she argues that as rates fall and deregulation takes effect, those sectors will recover, and this is where her thesis gets really interesting. She predicts that productivity will spike coming out of this slump, just like it has in past cycles. Companies have been in defensive mode for so long, she says, that once the uncertainty lifts, they'll start investing again, which will actually push inflation down even faster than people expect. This is vintage Cathie. She's going against the grain, saying we're on the edge of a productivity-led disinflationary boom. Not many are saying that right now. Now let's talk about the part you probably came for: Tesla and Elon Musk. The CNBC hosts asked her about Musk's recent political comments and his very public opposition to Biden's big, beautiful bill. And her response? Classic Cathie. She doesn't shy away from the potential drama. In fact, she floats what she admits might sound like a conspiracy theory. She suggests that at one point, Trump and Musk were close, and Tesla's Shanghai plant may have been used as a leverage point during trade negotiations with China. Wild, right? But what's more important is where she believes this is all going. Cathie thinks Elon is getting back to business: SpaceX, Neuralink, Optimus humanoid robots. She sees Musk returning to what he does best: solving big problems, pushing the edge of innovation, and transforming industries. And in her view, all the political noise is just that: noise. This too shall pass, she says. But then comes the real analysis. Will Elon's political moves hurt Tesla or his other ventures? Cathie acknowledges that SpaceX does have serious government ties, $22 billion worth of contracts, but she doesn't think that's at risk. Even the president who formed the Space Force would want to keep America leading in space, she argues. With Tesla and autonomous driving, she points to the messy state-level regulations and how the industry needs a push to the federal level. So if there is short-term friction due to politics, she sees it as just that: short-term. Long-term, Cathie still sees Tesla leading the charge. Now let's talk Neuralink. Cathie actually seems most excited about the deregulation she's seeing in healthcare, and honestly, this part was a bit surprising, in a good way. She says the FDA has been far more receptive and ambitious than people expected, and that's huge, not just for Neuralink, but for biotech and healthcare innovation more broadly. Cathie frames Elon's work here as part of a broader mission to tackle chronic disease and cure long-standing conditions, and if that deregulation continues, it could unlock massive breakthroughs. So again, she's taking the long view. Despite political battles and media storms, Elon is building the biggest AI and innovation projects on the planet, and those don't stop for politics. So here's my takeaway. Cathie Wood's tone in this interview was cautious but optimistic. She's not ignoring the risks, but she sees opportunity where most investors are still stuck in fear. She's betting that inflation is overstated, rate cuts are coming, and productivity gains are about to change the narrative completely. And if you follow her logic, from a rolling recession to a new innovation wave, it's a very bullish case for growth stocks: AI, Tesla, biotech, and the entire ARK playbook. Now, whether she's right or wrong is up for debate. But here's what's clear. Cathie isn't backing down, she's doubling down, and if you're investing in the future, you can't afford to ignore her perspective. Because love her or hate her, Cathie Wood is always thinking 5 years ahead. Let me know what you thought of her comments. Did anything surprise you? Are you buying the dip, or are you waiting on the sidelines? Drop your thoughts in the comments, and if you got value from this breakdown, don't forget to like, subscribe, and hit that bell so you never miss a deep dive like this one. Before it became a Wall Street legend, this company was quietly rewriting the rules of technology from the ground up. Its story didn't start with billion-dollar valuations or global headlines, but with a bold vision and a relentless drive to solve problems that others thought were impossible. Long before the world took notice, this company was a true pioneer in high-performance computing, pushing the boundaries of what computers could achieve. In labs filled with humming servers and the whir of cooling fans, engineers worked tirelessly to create hardware that could process information at unprecedented speeds. The founders had a radical idea. What if specialized processors could tackle complex visual and mathematical problems that traditional CPUs simply couldn't handle? This vision led to the birth of a new kind of chip, one that would eventually transform not just gaming, but the entire tech landscape. Their first target was the rapidly growing PC gaming market, where players demanded ever more realistic graphics and faster performance. By focusing on the needs of gamers, the company found its first loyal audience, one that would help propel it to new heights. The relentless pursuit of better, more immersive graphics didn't just win over fans, it sparked a revolution in visual computing. Product launches became major events, drawing crowds of passionate enthusiasts eager to see the next leap forward. At the heart of this movement was a visionary CEO, known for his trademark black leather jacket and unyielding ambition. Under his leadership, the company maintained the hunger and agility of a startup, always pushing boundaries and refusing to rest on its laurels. The CEO's bold predictions and uncanny ability to anticipate market shifts have made him a true icon in the tech industry. His willingness to take risks and bet on the future has inspired both his team and the broader business world. The company's journey is a masterclass in strategic pivots and reinvention. From its roots in gaming, it expanded into high-performance computing and then made a decisive leap into artificial intelligence, each move carefully calculated, each risk met with innovation. Rather than simply riding the AI wave, the company built the very foundation of modern AI. It developed not just the hardware but also the software platforms and developer tools that enabled researchers and engineers to push the boundaries of what machines can do. Today, this company is a full-stack computing powerhouse providing indispensable technology to data centers, robotics, the automotive industry, and creative professionals around the globe. Its innovations power everything from self-driving cars to blockbuster movies and scientific breakthroughs. So the next time you hear about a breakthrough in generative AI or see a stunning visual effect on screen, remember, behind the scenes, it's likely this company's technology that's making it all possible, driven by a legacy of innovation, leadership, and an unwavering commitment to the future. Now let's dive in deep into the tech company at the heart of the AI revolution that has created millionaires and will continue to make more is Nvidia, trading under the ticker NVDA. Nvidia isn't just another tech stock, it's the tech stock of our time, a foundational element of the digital economy still in explosive growth. Its story is one of strategic foresight, brilliant engineering, and perfect positioning. Nvidia has reinvented itself through every major tech trend: PC gaming, cryptocurrency mining, and now, artificial intelligence. Legendary investments don't just ride one wave, they spot the next one forming and get there first. A $10,000 investment in Nvidia in 2016, with another $10,000 in 2019, would be worth over $1.3 million by mid-2025. NVDA isn't just a stock, it's a stake in the future of AI, autonomous systems, and the digitization of every industry. As we break down Nvidia's growth, you'll see a clear pattern: innovation, market capture, and explosive returns. The principles behind its success are a blueprint for finding the next big winner. Nvidia's rise began with a mission to deliver the ultimate PC gaming experience. Its GeForce GPUs became the gold standard for gamers demanding more realism and performance. By investing heavily in R&D, Nvidia enabled game developers to create stunning worlds, driving gamers to upgrade to its latest hardware. This focus on high-end gaming established Nvidia as a premium brand with strong profit margins. Nvidia worked closely with game studios, ensuring blockbuster titles ran best on its cards, creating a powerful business moat. The gaming boom of 2016 to 2017 marked Nvidia's first major wealth creation wave, with its stock rallying 200%. Investors who saw Nvidia as the key enabler of a cultural trend were handsomely rewarded. Gaming remains a core pillar, generating billions and fueling R&D for future innovations. The technical challenges of gaming pushed Nvidia's engineers to develop architectures now used in AI and scientific computing. The gaming empire was the bedrock for Nvidia's AI-powered future. As Nvidia dominated gaming, a new demand emerged from cryptocurrency. Digital currencies like Ethereum needed GPUs for mining, sparking a surge in demand for Nvidia's cards. This unexpected crypto craze led to shortages and soaring prices, proving Nvidia's technology had uses far beyond gaming. For investors, the crypto boom was the second major wealth creation wave, amplifying gains from gaming. The volatility of crypto introduced risk, but also opportunity. Market downturns became golden buying moments. The 2018 crypto crash and trade war depressed Nvidia's stock, but the company's fundamentals remained strong. Nvidia's leadership in graphics and the early seeds of AI were already in place. The crypto wave stress-tested Nvidia's supply chain and boosted revenues, bridging the company to its next transformation. It was a wild ride, but it set the stage for the AI tsunami. Nvidia emerged stronger, ready for the next big wave. If gaming was the first wave and crypto the second, artificial intelligence is the tsunami that propelled Nvidia into the stratosphere. The scale and speed of this transformation is unlike anything the tech world has seen before. While previous booms were significant, the AI revolution has fundamentally altered the trajectory of not just Nvidia, but the entire technology industry. It's a force that's reshaping how we live, work, and interact with the world around us. Years before AI went mainstream, Nvidia made a bold bet that its GPU architecture would be the key to unlocking the mysteries of deep learning. While most companies focused on traditional computing, Nvidia quietly invested in research and development, refining its chips to handle the massive parallel processing required for neural networks. This foresight set the stage for everything that followed, giving Nvidia a head start that competitors are still struggling to catch up to. To empower developers, Nvidia built 𝗗𝗜𝗦𝗧, a revolutionary platform that allowed programmers to tap into the raw power of GPUs for AI and scientific computing. 𝗗𝗜𝗦𝗧 became the backbone of a thriving ecosystem, enabling breakthroughs in everything from self-driving cars to medical research. By providing both the hardware and the software, Nvidia didn't just participate in the AI revolution, it became its engine. When pioneers like OpenAI and Google set out to build large language models and advanced AI systems, they faced a daunting challenge: finding hardware powerful enough to train these models. Nvidia's GPUs were the only viable choice, offering unmatched performance and scalability. As a result, Nvidia became the backbone of the world's most ambitious AI projects, powering breakthroughs that are now shaping the future. The generative AI boom triggered an astonishing 800% rally in Nvidia's stock over just 2 years. Investors and analysts watched in awe as the company's revenue and profits exploded, shattering expectations quarter after quarter. Nvidia's meteoric rise became a symbol of the new AI-driven economy, and its success story inspired a wave of innovation across the tech sector. Between 2019 and 2025, Nvidia's revenue grew at a staggering 49% compound annual rate, while net profits soared at 61%. These numbers are almost unheard of for a company of Nvidia's size, reflecting not just strong demand, but a fundamental shift in the world's computing needs. The company's financial performance has become a benchmark for the entire industry, signaling the dawn of a new era. AI is more than just a technological trend, it's a foundational shift that's transforming every industry, from healthcare and finance to manufacturing and entertainment. Companies everywhere are racing to integrate AI into their products and services, and they all need Nvidia's technology to do it. The demand for powerful, efficient GPUs has never been higher, and Nvidia is at the center of this global race. This creates a durable, long-term demand cycle that's far larger and more resilient than anything the company has experienced before. As AI becomes embedded in every aspect of our lives, the need for Nvidia's hardware and software will only continue to grow, ensuring its dominance for years to come. With a market cap closing in on a staggering $4 trillion, this tech giant continues to dominate conversations across Wall Street. Currently valued at $3.78 trillion, Nvidia is not just a chipmaker anymore, it's become the backbone of the AI revolution. And analysts, including those from Wedbush, are naming Nvidia, alongside Microsoft, as a frontrunner to hit that historic $4 trillion milestone. The numbers speak for themselves. Nvidia reported $130.5 billion in revenue in 2024 and a staggering $72.88 billion in net income. That gives them an EPS of $3.14 and a PE ratio of 49.24, which many argue is lofty but potentially justified given their market dominance. The stock is currently trading at $154.61, which is roughly 25% below its estimated fair value of $193.33. Indicating possible upside for long-term investors. Now let's talk about why investors are still bullish. Nvidia remains the clear leader in AI, from data centers to generative AI to autonomous driving. Analysts continue to call it one of the best artificial intelligence stocks to own. The company has played a massive role in the ongoing AI boom, and its innovation in chip design has helped fuel a strong market rebound following earlier lows in the year. Their hardware isn't just powerful, it's essential to the next phase of technological advancement, and that's not all. As the autonomous vehicle market continues to grow, Nvidia is well-positioned to benefit. Its AI chips and platforms are already deeply embedded in many next-gen automotive technologies. That adds another powerful growth driver to its already strong AI ecosystem. Analyst forecasts remain optimistic. Many expect the stock to hit $200 per share, which would represent solid gains from current levels. The outlook is broadly bullish, driven by both fundamentals and the wider AI narrative. But it's not all smooth sailing. There have been some recent stock declines that raised eyebrows, most notably due to insider selling. Executives at Nvidia reportedly sold over $1 billion worth of shares during the recent surge, and while insider selling isn't always a red flag, Such a large sell-off has understandably made some investors nervous about whether the stock's best days, in the short term, might already be priced in. Another concern lies in the competitive landscape, particularly the rise of Chinese AI startups. Some of these firms are preparing to go public, and they're aggressively targeting the semiconductor space. While Nvidia still holds a strong lead, competition is heating up fast, and it's global. And then there's the issue of valuation. At a nearly 50x PE ratio, some analysts are questioning whether Nvidia's current price reflects overly optimistic expectations. Is the growth truly sustainable, or are we looking at a stock that might be ahead of itself? At the end of the day, Nvidia is balancing massive achievement with a few notable challenges. It's at the forefront of AI and tech innovation, but it's also under a microscope from investors, analysts, and competitors alike. So while the sentiment around Nvidia remains largely positive, driven by strong performance, innovation, and market leadership, investors should remain aware of the potential risks. The conversation around Nvidia's future is far from settled, and as the tech sector evolves, so too will the company's role in shaping it. Keep your eyes on this one, because no matter what side of the debate you're on, Nvidia is a stock that's simply too big to ignore. Nvidia is now the platform on which the next generation of technology is being built. From smart cities and autonomous vehicles to advanced robotics and personalized medicine, the future is being shaped on Nvidia's foundation. The tsunami of AI has changed everything, and Nvidia is riding the crest of that wave into a new era of innovation. How does Nvidia grow profits faster than revenue? Its secret is an asset-light business model. Nvidia doesn't own chip factories, it focuses on research, design, and innovation, outsourcing manufacturing to foundries like TSMC. This lets Nvidia avoid massive fixed costs and stay nimble, collecting high-margin royalties on its designs. When demand surges, revenue skyrockets, and most of it flows straight to the bottom line. Its main costs are brilliant engineers, not expensive factories. This creates incredible operating leverage. Each extra dollar of revenue brings in outsized profit. Nvidia's asset-light model is the financial engine behind its technological dominance and shareholder wealth. It allows the company to scale rapidly and fund relentless R&D, staying ahead of competitors. It's a model built for speed, scalability, and profitability. Nvidia's story inspires a key question. How do you spot these opportunities before they make headlines? If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Nvidia's journey is far from over. The next waves of innovation are already forming. The next frontier is AI at the edge, bringing artificial intelligence to everyday devices, from smartphones to factory robots. Nvidia is targeting this market with its Jetson and Orin platforms, and its Drive platform leads in autonomous vehicles. Intelligent robots and smart cities are trillion-dollar opportunities, powered by Nvidia's Isaac and Omniverse platforms. Omniverse lets planners simulate smart cities before building them, with Nvidia's chips running both the simulation and the real thing. Smart investors watch Nvidia closely during market dips. Volatility often creates buying opportunities. The data center AI boom may one day be dwarfed by the edge AI revolution. When that wave hits, it could trigger another massive rally. The strategy: understand the long-term vision, and use short-term uncertainty to build your position. Nvidia is building the infrastructure of tomorrow. We've covered Nvidia's journey from gaming to AI dominance, but there's more for those who want deeper insights. Join our Patreon for exclusive analysis, early trend alerts, and a community of serious investors. Patrons get monthly quandas, in-depth research, and direct access to our team. Your support helps us create more free, in-depth content. Don't forget our Value Stocks Investing Master Course, now updated with modules on AI investing. This is your chance to build the skills to find the next Nvidia. Learning to invest is the greatest skill for building generational wealth. Now I want to hear from you. What innovation will create the next wave of millionaires? Quantum computing, biotech, space, or something else? Drop your thoughts in the comments below, and don't forget to like, share, and subscribe for more investing updates. Thank you for watching, and here's to your success.